This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending November 28th, 2020. Our question this week is, what is shorting a stock? The answer will be provided later in the video. This week, the market was up. The Dow Jones Industrial Average increased 0.13% on Friday and was up 2.21% for the week. The S&P 500 increased 0.24% on Friday and was up 2.27% for the week. The Nasdaq increased 0.92% on Friday and was up 2.96% for the week. The S&P 500 and the Nasdaq closed the week at all-time highs. Looking at the week, we can see that there were 10 up finishes versus 2 down finishes for the indexes. On Monday, Tuesday, and Friday, the major market indices were all up. On Wednesday, the Dow Jones Industrial Average and the S&P 500 were down, but the Nasdaq was up. The market was closed on Thursday for Thanksgiving. The new unemployment claims were 778,000 versus 733,000 expected. Continuing unemployment claims were just above 6 million. President-elect Biden has chosen former Federal Reserve Chairperson Janet Yellen as the new U.S. Treasury Secretary. The FDA has approved Regeneron's COVID-19 treatment for emergency use. AstraZeneca reported that their coronavirus vaccine is 70% effective. The U.S. economy grew at an unrevised rate of 33.1% in the third quarter, and President Trump lost his appeal to undo the results of Pennsylvania's presidential vote. New unemployment claims, continuing unemployment claims, presidential cabinet selections, FDA drug approvals, vaccine trial results, and presidential election result court cases are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers that be is the Federal Reserve. The Federal Reserve is the most powerful entity in the world, and the U.S. military backs them up. Their monetary policy affects the American and the world economies, and of course, their policies affect the U.S. stock market. They will do what they must to drive the market higher. Our question of the week: what is shorting a stock? Shorting a stock is borrowing a stock and selling it, and then buying it back and giving it back to the owner, which is usually the broker. A trader borrows a stock and sells it with the idea or plan to buy it back at a later date once the price drops. This is how a trader can profit from a stock decrease in price. Shorting a stock is betting that the stock price is going to go down and trying to profit from the price decline. Of course, sometimes the best laid plans do not work out. Shorting a stock is extremely risky because the stock may not decrease in price, it may increase in price, and the trader might have to buy the stock back at a higher price and sometimes a much higher price. Do you own any stocks? Have you ever tried shorting a stock? If not, Why not? Are you afraid that the market may fall again? That's when you short. The market will fall again at some point, but again, shorting is extremely dangerous because the stock market normally bounces back and goes up, and it may go up very quickly. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending November 28th, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Moderna, ticker symbol MRNA in the first column. It increased 30.14% for the week. It was up 16.35% on Friday. Moderna is a pharmaceutical company that is developing a coronavirus vaccine. The stock has been the top performer on the list several times this year. I made a trade on Moderna this past week, and I have traded and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from using the Southside trading strategy. The Southside strategy involves trading for weekly cash flow. That is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of November 28, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. Year to date, my portfolio is up 22.54% versus 12.65% for SPY, a difference of 9.89%. I am beating SPY by 9.89%. This week, equities, including puts, calls, and ETFs, make up 31.16% of the portfolio. Cash is 68.84%. The cash flow generated for this week was 1.31% of the portfolio account value. The account value changed by minus 0.41%. Meanwhile, the S&P 500 ETF, SPY, changed by plus 2.65%. I sold option contracts on 8 positions this week, 6 calls and 2 puts. That ranged from $114.35 to $353.39. You can get more details, including total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia. Available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.